Welcome to Trading to Rise. Have you ever felt like the stock market is speaking a secret language and you're the only one who doesn't have the dictionary? Well, you're not wrong. The big institutional players, the ones moving billions of dollars, they leave clues about their intentions everywhere. They're hidden in plain sight, and in this explainer, I'm going to show you exactly how to read their secret code.
First things first, we've got to understand that there are two different games being played in the market. You've got the retail traders, that's most of us, who mainly focus on buying options. Now, statistically, that's a tough game. You've got about a 33% chance of being right. But then you have the institutions, the smart money, and they play a completely different game. They focus on selling options, which right off the bat gives them a 66% probability of success. So, if you want to win, who do you think we should follow? It's a no-brainer. We need to learn to think like them.
So why is selling options such a high probability game? Well, think about it. When you sell an option, you're not betting on exactly where the market will go. You're just betting on where it won't go. You collect a premium up front, and then your best friend becomes time itself. Every single day that ticks by, the value of that option decays a little bit, and that decay goes straight into your pocket as profit. They don't need to be perfectly right about the direction, they just need the market to stay within a certain zone.
Okay, that brings us to the real question, right? If these huge institutions are placing these massive bets, where can we actually see what they're doing? How can we get a look at their game plan before the big moves happen?
The answer is right here. It's called the option chain. Now, I know, it can look a little intimidating at first, but I want you to think of it as a public record of every single bet being placed in the market. It's the blueprint, the treasure map. This is where the big money leaves its footprints, and we're going to learn how to follow them.
Now, when you open up an option chain, you're going to see dozens of columns, tons of data. It's easy to get analysis paralysis. But here's the secret. To get started, I want you to ignore almost everything. We're going to laser focus on one single number. This one number tells us almost everything we need to know. And that magic number is open interest, or OI. Now, don't confuse this with volume. Volume tells you how many contracts were traded today, but open interest, that tells you how many contracts are still open, active, and holding money. It shows you where the big players have actually committed their capital. This is our single biggest clue to figuring out where they've drawn their lines in the sand.
So we know to look for high open interest. We scan the data and we find the big numbers. But what does a big number actually mean? How do we translate that into a real prediction about where the market is headed? This is the part that requires a total shift in how you think about the market.
And here it is, the number one, most important, absolutely critical rule for decoding the option chain. You have to think like a seller. I'll say it again, think like a seller. Why? Because the institutions, the smart money we're trying to follow, they are the sellers. So when we see a huge pile of open interest, we don't ask, wow, who's buying all these? We have to ask, why did the big institutions sell all these right here?
And this is where we flip the whole thing on its head. When you see a massive mountain of open interest on call options at a certain strike price, your gut instinct is to think, oh, people must be really bullish. But it's the exact opposite. It means the institutions have sold a giant wall of calls, betting that the price will not go above that level. That level becomes a ceiling, what we call resistance. And on the flip side, when you see huge open interest on put options, it means they've sold a floor of puts, betting the price will not fall below it. That becomes our support.
Okay, let's look at a quick example. Here's a simplified option chain. In the middle, you have the strike prices. On one side, you have the call open interest, and on the other, the put open interest. Just take a second and scan the numbers. Can you see where the institutional walls are being built? You're just looking for the biggest numbers on each side.
The process here is super simple. Step 1. Look down the call OI column and find the biggest number. That strike price is your resistance. It's the ceiling. Step 2. Do the exact same thing on the put OI side. Find the highest number there. That strike price is your support. It's the floor. And just like that, you've identified the most probable trading range for the day. The market is very likely to get stuck between these two powerful forces.
I absolutely love this analogy, especially for our viewers in India. Think of it like a cricket match. The price is the batsman. The high open interest levels, that's where the institutions have placed their best fielders, standing shoulder to shoulder. They've created a defensive wall that makes it incredibly difficult for the price to score, to get past that point.
So, open interest gives us the big picture strategy, right? It's the game plan before the match starts. But what happens once the trading day begins? What if the market sentiment shifts and the players on the field suddenly start changing their positions? How do we track that in real time?
For that, we look at our second piece of data, the change in OI. This column tells you what's happening today, right now. Where are new positions being added? Are more call sellers jumping in to defend that resistance level even more fiercely, or are put sellers getting nervous and closing their positions? This is your live play-by-play of the market's internal battle.
All right, so we've got our range and we can track the intraday momentum. But is there a way to get a quick snapshot of the entire market's mood? Like a single number that tells us if the overall feeling is bullish or bearish?
Yes, there is. It's called the put-call ratio, or PCR. Simply put, it compares the total number of puts to the total number of calls. If the PCR is above 1, it means there are more puts than calls. Basically, fear is in the air. If it's below 1, it suggests more calls are being traded, and the sentiment is leaning bullish or maybe even greedy. Pro tip, many experienced traders use this as a contrarian indicator. When the PCR is extremely high and everyone is terrified, that might be a great time to look for opportunities.
So let's put this all together into a simple 4-step checklist you can use every single day. 1. Open up the option chain. 2. Find the highest OI on the call and put sides to map out your support and resistance range. 3. Keep an eye on the change in OI to see where the real-time battle is happening. And 4. Take a quick look at the PCR to get a read on the overall market mood. That's it. That's your framework for reading the market's secret code.
So, the next time you look at the market, don't just see a chart with flickering prices. Look deeper. Open the option chain. The data is all there, showing you exactly where the most powerful players are placing their bets. The only question left is, what is it telling you? Now, I want you to take this knowledge and apply it in your very next trading session. See for yourself how powerful it is, and make sure you subscribe to Trading to Rise.